One of the most important principles regarding whether you should invest money in the stock market is your time horizon. Got a real life financial planning story? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Real life financial planning story. And again, everything is confidential. And so I'm changing some of the details to kind of protect those involved. But gosh, guys, just a real life illustration of one of the most important investment principles that at times we can ignore, we can forget, or we can overlook, and end up, it can cost us dearly. Just recently, I was getting ready for a meeting with some folks that I only see about once a year. And typically, you should see your certified financial planner that's doing comprehensive financial planning. Typically, you should see them twice a year, okay? If you run a business or have a lot of complexity in your situation, maybe 3 times, something like that. But a check-in in the spring where you're doing your taxes, doing your tax planning, laying out goals for the year, trajectory for the year. Yep, that makes sense. And then once again in the fall. So typically, you're gonna meet with your CFP twice a year. But sometimes, depending on your situation, if it's really simple or whatever, then maybe just once a year. And I was preparing for one of those meetings where it was just once a year, and I was reviewing some of the notes from our previous discussion, and the previous discussion being the fall of 2021. And I was reading through those notes, and I was looking back at an email that they had sent me in anticipation of that discussion back in, again, fall of 2021, and where they had asked several questions. Now, it's hard to do, but think what was happening in the economy, in the stock market in the fall, September of 2021. Everything seemed great. In fact, in the stock market, more than great. There was meme stocks. There was rampant speculation. It seemed like everyone was trying to borrow money or throw every little extra spare change they could onto a stock, into the stock market, something, because things were just going up so quickly. And in this situation, very different than right now. In this situation, these folks were planning on a major home renovation to the tune of, maybe $150,000. However, also, and we're still sort of in this time frame right now, in this circumstance, but they couldn't find anyone that could do the work. And they were seeing, prices going up, and they weren't sure they wanted to pay these higher amounts. And so they had $160,000 sitting in cash. Very unusual. $160,000 that they've stored up, sitting in cash, waiting for this home remodel. And it was just waiting and waiting and waiting. And one of the questions, I think you can probably anticipate where I'm going with this. One of their questions that they shot in an email to me said, we'd like to talk about this when we meet, is, should we invest this $160,000 in the stock market? Should we invest it? And they actually had picked out 2 different index funds, an S&P 500 index fund and a total stock market index fund that was going to include both the S&P 500, but also mid cap and small cap. And they had the questions down. They were so determined this is what they should do. Thankfully, they did ask, should we do this? And then they were so determined that, this probably makes a lot of sense, that they were then asking, should we use an index fund or an ETF? And the conversation went deeper. So again, put yourself in that environment. The stock market was up double digits. Everything was going great. There was way more demand in the economy than there was supply, and there was, the party was raging. And so put yourself in that mindset. I'm looking through my notes, and I actually had, as I'm reading this a year later, I actually had a little bit of panic, like, oh my goodness, what did they listen? What did I say? How'd that conversation go? I couldn't remember it, okay? And so I'm reading through the notes, and I asked them, I actually typed into their email, and I made this part of my notes and agenda for that meeting. I asked them, okay, how likely is it that you're going to use the money that you're still going to be looking to do this remodel? And if someone comes along that's able to do it, and they're able to do it at the right price, that you would spend this money within the next 2 to 3 years? And their answer was, yeah, likely. We're waiting. We're hoping we can find someone. And if we can't find someone that can do the entire project, then we're going to look for people that can do, just a portion of the project a little bit at a time. So yeah, we're going to be using this money in the next couple of years. And I immediately said, then you can't invest it. Whether the stock market's doing great or doing terrible, the most important first question is, when are you going to need the money? And if you're going to need the money in the short term, which the short term I would define as inside of 3 years, then you can't invest that money. You can't. It's just not appropriate. The stock market, I am a believer in the long-term potential and opportunities that the stock market provides. However, we also know that the short-term performance is a leaf in a hurricane. There's no way to predict it. I can tell you 4 out of 5 years the market's positive. I can tell you on average, the stock market from a high point to a low point goes down about 14% every single year. But that's it. We've got historical perspective, but that suggests that if you're going to use money in the short term, the stock market isn't the right place for it. So also put yourself back a year ago. So my advice was, you can't put it in the stock market. That short-term money, it needs to stay low risk. And what was low risk paying at that point? Next to nothing. Next to nothing. This was hard advice to give, very hard for the client to hear. There's a lot of money sitting there, earning nothing because interest rates were still at 0%, and the Fed at that time was still saying, we're not going to thinking about raising interest rates for at least another couple of years. And I'm hoping that they took that advice. And guys, they did. They did. They received the advice to not throw this extra money into the stock market, even though up to that point, the stock market had returned almost 99% over the prior 3 years. They decided not to do that. They kept the money in cash, and therefore, when I spoke with them just last week, they had 150 of that 160,000. And why did they have 10,000 less? Because they had started to do some of the projects that they were planning on. They still didn't have a full contractor that could do the entire project, but they were starting to do a little bit at a time, as they told me they would. Had they stuck to their original intuition or ignored my advice and said, no, we're losing money by having this money sit here earning nothing, and everyone's making money in the stock market, that $160,000 would likely today be $125,000? They were just going to put it straight in the stock market, and so they probably would have lost, I don't know, $35,000, $40,000. I'm not doing the exact math, but that decision alone, just to stick to principles, stick to investing principles, saved them that much money and gave them incredible peace of mind now as we're facing this economic storm. So here's my question to you. Do you have principles guiding your financial decisions, specifically your investment decisions? Is it principle based? And is it based on your overall financial plan? Sometimes the financial plan, that term, can be a little mysterious, and sometimes it makes it sound like there's this roadmap, and which is not true. And other times it's just meant to be this sort of nebulous, vague and imprecise excuse for making decisions. No, guys. Number one, it's not a map, because your financial life and situation and your finances around you are constantly changing. My analogy is that, imagine having a map that was constantly changing. The landmarks were changing, roads were turning and changing and would never stay still. That's what your finances are. Things are always shifting. Your priorities are shifting. Your income's shifting. Your financial surroundings are shifting. So it's not a map. But it's also not this made up sort of excuse for, talk to someone before you make any decisions. No, it's looking at your overall, all 6 areas of your financial life, having them, all of that completely up to date. So then when you have choices, financial decisions to make, you can look and say, how will that decision impact all 6 areas of my financial life? And will that impact them in a positive way or a negative way? And that, through that financial planning perspective and the principles that you would use, within that, you would see that, if I'm going to need this money in the short term, I shouldn't invest it in the stock market. Hindsight's 20/20. You might be looking back on that now and say, of course. Well, then now let me ask you a question. Do you have money right now that you're keeping in cash that really actually is for the long term? And you should maybe start devising a plan with your certified financial planner to start trickling some of that money into the market, buying investments at these lower prices, even if they go lower. Do you have some money that's invested that you actually need in the short term? You're retired or getting close to retirement, and you're going to need this money in the next couple of years, and therefore it's imprudent to have that money in cash. And really any variety of questions in between. Are you taking a principled and planful approach in your finances? If you're not, work with your certified financial planner. Make sure that they're doing comprehensive financial planning. If you don't have one of those on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.